Hi, I'm Craig from retirebeforedad.com. Today we'll look at 3 ways to determine your current asset allocation when you have multiple brokerage accounts so that you can properly rebalance to your target asset allocation. We'll start with a spreadsheet, then we'll look at Morningstar Investor, which is a paid tool, and then a free tool called Empower. Every January for the last 20 years, I've analyzed my retirement portfolio to determine if I need to make any changes or rebalance. Why January? January works for me because I'm through the holidays and I want to be consistent about it. You want to avoid rebalancing based on emotional triggers like a market move or anything like that. So I try to do it once a year. We shouldn't do it any more frequently than once a year. In this video, I'm going to look at my current asset allocation and then show you how I approach trying to reach my target asset allocation. Now, if you have just one brokerage account and all of your assets are in there, it's fairly straightforward to be able to analyze that and rebalance it. But when you have these multiple accounts, it can be a bit less straightforward. But we want to take a comprehensive look at all of our accounts as we determine how we're going to set up our asset allocation and then rebalance every year. And rebalancing is also a good time to think more about streamlining, where you can reduce the number of funds that you own, especially if there's overlap between funds, or if you still need to sell some losers that you didn't sell at the end of the year for tax loss harvesting. January is just as good a time to do that. Most of my assets are at Fidelity, and they do a surprisingly lousy job at showing you what your total portfolio looks at. I have, I think, 5 accounts there, and they don't give me a total portfolio view. I can't determine my stock to bond ratio. I can't determine what percentage of my accounts hold international stocks or international funds. And so to take a comprehensive look, I'm going to show you a few different ways to do it. First, I'll show you how to determine your current asset allocation and achieve your target asset allocation using a spreadsheet and just dumping tables or the data out of your brokerage account. And then I'll show you a couple different tools that can help you with portfolio rebalancing that are pretty good at aggregating your accounts from different sources, especially if you have maybe an account with Fidelity, an account somewhere else, and your spouse might have an account somewhere else. How you build your portfolio and rebalance is up to you, but I'm going to show you how I think about it and the tools I use to accomplish it. Let's take a look. First way we're going to do this is using Excel. It works the same with the Google Sheet. So most people have access to a spreadsheet. A lot of people are comfortable with spreadsheets. So I'm going to show you how to do this with a spreadsheet first. Now, what you're looking at is some data that I dumped out of a brokerage account, and I changed the values around to dummy this up. But most of us have access to a brokerage account, and you can look at your portfolio holdings and export the data, and that's what you're looking at here. I've tweaked it a little bit. In this case, I've simulated that I've dumped out 4 accounts. One is a joint taxable account. We have a primary IRA and a spouse IRA, and then just a savings amount from a savings account. So the first step is to dump the files and then classify each record. I've classified them 2 ways: cash, domestic stock, international stock, bond. The second way I've classified these is the subclass, and I'm just using either fixed or equity. So that's stocks and then bonds and cash and money market money. I've modified this export and sort of just deleted these fields like quantity, price, and cost basis. But the part you really need is the market value and the classification. So I've already done this. Let me show you real quick how to do a pivot table. So the first step is to highlight the data you want to bring over. Make sure that each column has a heading, and then you go to insert pivot table, and we're going to do this in a new worksheet. And it brings up this little box, and then you have all these fields, which are the headings in each of your columns. So in this case, we're going to use the classification as the row and the total market value as the value. This is a very simple way to get an overall view of your total portfolio once you've dumped it all into the spreadsheet from your broker. And then to get the percentage, you just take the market value, is that B4 divided by B8, and it's going to give you the percentage, and copy that down. Now that we have our current allocation, we want to compare that to our target allocation. Now in this case, I have a couple who's about 75 years old. We're going to target domestic stock at 50%, cash at 20%. They're fairly conservative. They don't want to put a lot of their money at risk. Bonds are at 20%, and international stock is at 10%. So comparing the current allocation and the target allocation, we're pretty far off. The next step is to multiply the target percentage, which is 50%, by the total value, which is this 818,000. So we come up with where we want to be with our target amounts in each asset class. And then I just did a subtraction here and came up with the difference. And so what we're looking here is we want to sell about $56,000 worth of domestic stock. And we also want to transfer money out of cash in about this amount. Now with the proceeds of those sales, we're going to buy bonds and international stocks, approximately these values. Now I want to stress, this is not a perfectionist's task. it doesn't have to be perfect. Remember, the day that you do this rebalance, it's going to change the very next day, but make some tweaks so that you're closer to your target asset allocation. So once you have these values, you go back into your brokerage account, you sell $56,000 worth of domestic stock assets, and you can move some money out of cash into bonds and international stocks. The easy way to do that is just to keep the ETFs you have. So when you're adding to your international ETF, in this case, we put it right back into this VXUS, and we probably take it out of the VTI. Now, there are some tools out there that I have used over the years to help with analyzing my portfolio, to take a comprehensive look. The problem that we have is I have 5 or 6 Fidelity accounts. My wife has 2 Fidelity accounts, and I have another brokerage account elsewhere. And so looking at all those accounts in one view is just not possible at Fidelity. They just don't allow me to do it, or at least I haven't figured out how to do it. So I can either dump it into a spreadsheet, which is a manual process, especially when you have as many holdings as I do. And so I found that tools make this job a little bit easier. So what you're looking at here is my asset allocation in the Morningstar Investor tool. Now, this is a paid tool. There's a free one, and I'll show you next. But I like this one because it lets you get really granular with what you own. So there's a pie chart, and the asset class is automatically classified. When I did it manually, Fidelity wasn't giving me that information. So Morningstar does this automatically, so they know what funds I hold that are U.S. stocks, which are non-U.S. stocks or international. I've got fixed income and a little bit of cash in there. It also breaks it out by sector if you're interested in that, and then North America and international. There's some other information over here, and really this is comparing your current allocation right here with this investment with a benchmark. And these benchmarks, they're not perfect. I'm actually in this moderately aggressive one right now that is about 19% fixed income. The aggressive benchmark is 5% fixed income. My target asset allocation is actually about 10% fixed income and 90% stocks. And I come to that value by taking the number 140 and subtracting my age, which is 49. That gets me to about 90% stock to bond ratio. I call this the minus your age rule of thumb. I've done a video. I'll put a link down on the bottom, but the video explains how to come up with your ideal asset allocation, or an estimate of it, where you typically take a value such as 140 or 130 or 120 if you're less aggressive. You minus your age. That gives you your stock to bond target portfolio allocation. So for this benchmark, I'm not really paying too much attention to this because I have my own benchmark, and it doesn't let you do that manually, which would be a nice improvement here. All right, so I changed my benchmark to aggressive. I'm looking for stocks to be approximately 90% of my portfolio versus 10% bonds. And what we see here is that my fixed income, which is my bond holdings, is about 6%. I want that to be 10%. My international holdings, this non-US stocks, at 10%. I actually think that could be a little higher at maybe 15 to 20%. So I have a few tweaks here, and I haven't done this year. This is my real portfolio. So my next step is to exchange some US stock funds that I have at Fidelity and put more of that money into international stocks. I may go up to about 15% there. And my fixed income, I'd like that to be 10%. That was closer last year at the beginning of 2024, but when stocks went up 25%. So that's why my fixed income value has gone down. And this is why we rebalance. If I want a 10% fixed income portfolio and I don't have it, then I need to make some adjustments. But the key here is to do it consistently. It's just something to do once a year, about the same time of the year. And again, it doesn't need to be perfect. This tool, by the way, is really great. You can connect your accounts through a third party, through like a Plaid, and then it imports all of your data and updates it every day. And I found it to be very reliable. I have my Roth, my traditional coming in here, and then I just have my total portfolio where I'm taking my wife's accounts and my accounts, and we're putting them all together, and this is what we see. So I really like this tool. So there's an overview, there's holdings where you can see all of your holdings. So I'm in this X-ray tool, which is what you're seeing, this overview, but you can dig in a little closer on asset class or stock sectors, world regions. There's a performance tab here, and then this stock intersection I find to be really useful, where it's going to show you where your funds overlap. For example, I own Apple stock, and one of the primary funds I own is the FSKAX Total Market Fund, and there's Apple, and Apple is the largest holding in that fund. And so it's going to show you where that overlap is. Even this tool, I'm just getting used to it, but it's really great at showing me that overlap, especially with some of the individual stocks I own. So I'm in the process of streamlining my entire portfolio, and I have a lot of individual stocks, both in retirement accounts and taxable accounts. And so it's a long-term process. I'm not just selling all my stocks at once. I'm taking my time and strategically reducing the number of holdings I own over time so that when I do retire or when I'm closer to retirement age, I don't have a full-time job managing my portfolio. I really want it to be simplified. I have spent a lot of time building that portfolio. It's fairly complex, and I'm at the point where I don't need it to be complex. I want to spend more time doing other things and not portfolio management. And this Morningstar tool is helping me do that. This is a paid tool. There's a link in the description if you want to try a free trial. I think it's like a 14-day free trial. I'm an affiliate partner with Morningstar, so if you use that link to sign up, I will get a commission. It's $200 or $300, somewhere in that range per year. I'm on a free trial now, and I'm considering buying this going forward. The next tool I'm going to show you is a free tool. It's called Empower. It's formerly known as Personal Capital. So this is just a screenshot from my account. Normally on the left side here, you'd see a list of all your accounts which you can connect through a third-party app. And over the years, it's been sort of struggling with some connectivity, but I've been logging back in recently, and it seems to be working a lot better. They do finally seem to be updating this tool more. For a while, they were adding all kinds of functionality, but when it became Empower, it was sold. They seemed to lay off the improvements, but recently I've logged in a few times, and I'm seeing some new features, which I really like, and the connectivity is working better. A lot of people use this tool because it's free, and it does a really good job of aggregating your accounts and giving you views like this one. From the menu, you go to Investing and then Allocation, and you're going to get to this view. So this is a screenshot of my current asset allocation. It's a little different because one of the accounts wasn't connected, but you get the idea here. We're looking at my portfolio, and it's US stocks is almost 80%, and here we have bonds, and this tool is breaking out international bonds and cash, and that cash is coming from my actual bank account. So this is giving a more comprehensive look. I also have some alternative assets here. This is, I think, some real estate crowdfunding and maybe a few other alternative assets, and then unclassified. I found that this tool doesn't always classify the holdings as well as the Morningstar tool, but you can go into this manual classifications area and then change that classification. You can also go into this drop down here and choose the accounts that you want to show up in this visualization. I have some 529 assets connected to Empower, but I exclude the 529 from this because this is my retirement portfolio, not my college savings portfolio. So this is another great tool for figuring out your current asset allocation and then what changes you need to make to get to your target asset allocation. And when you make your changes on your brokerage side, you can log in the next day and it'll update this account with the connectivity, and you can see your portfolio changing day to day when you're making those rebalancing moves. Now, this is just the one view that I'm sharing here, but you can click into any of these and get a little more detail into the different holdings. And here's the percentages. So this is actually close to what the Morningstar was saying. The international stocks is at 10%. I think US stocks was 82%. So pretty close here, but like I said, there's other accounts connected here, so it's not an apples to apples comparison. But for demonstration purposes, this is another tool you can use. I'm also a very long-term partner with Empower and Personal Capital. I've been an affiliate partner for years, so if you use a link in the description and you connect your accounts, I may receive a commission. The one thing to keep in mind is that Empower uses this tool as a lead generation mechanism for them. So when you connect your accounts, you're agreeing to let their advisor see your account, and they may call you and offer you wealth management services. That's why I'm moving more toward paid tools, because I don't want to receive those phone calls, and I want to keep my data a little more to myself. And so I've been using paid tools like Bolden and Projection Lab and the Morningstar tool. I'm probably going to be paying for that soon too. Empower does similar retirement planning functionalities as Bolden and Projection Lab, and I've got videos on those two tools. It does some of that planning as well, but again, it's not as private. So I'm leaning more toward the paid tools now because I don't want to become the product when I'm connecting my accounts to these products. But a lot of people really like this tool, and so I am still an affiliate partner. If you use a link, I may receive a commission. The key to rebalancing your retirement portfolio is to understand your current asset allocation so that you can figure out how to get to your target asset allocation. You can do this as an individual or as a household with your spouse. It's up to you how you do it. We do it in our family. My wife and I manage our retirement together because that's our plan going forward, but it doesn't have to be that way. The annual process is another good time to streamline your portfolio and to eliminate duplicate holdings, or if there's a lot of overlap between funds and it's unnecessary, then you can exchange funds one for another to try to clean up your portfolio. Or it's not a bad time to sell stocks that aren't serving your portfolio anymore, or losers that you can use for tax loss harvesting later on when you're doing your taxes. You want to rebalance once a year and no more frequently than that, and try to be consistent about when you do it, because you don't want to be rebalancing based on emotional triggers like the stock market fluctuating or a personal event. So pick your month that you're going to do it and stick with it. I use January just because that works for me, but it doesn't have to be the beginning or the end of the year. Just that's when a lot of us think about this stuff. I'm Craig from retirebeforedad.com. I've been doing this for 20 years. I've been investing for 30 years. I studied finance in college, and I started writing about personal finance and DIY investing in 2013 when I launched my blog. What I know for sure is that we are all capable, or most of us at least, are capable of managing our DIY portfolio and our retirement for most of our lives, as long as we keep things somewhat streamlined and simplified. More complexity doesn't increase your returns. It just increases the work that you need to do to earn market returns or whatever returns you're hoping to earn. So try to avoid too much complexity. And if your portfolio is complex, which mine is, by the way, I'm trying to streamline it away from the complexity. Work on streamlining it, because you don't want to have a full-time job managing your retirement portfolio in retirement. We want to make time for the things in retirement that are important to us but are not associated with money. Thanks for watching.